let's take it right from there. We're still on Market Street, of course. Bismarck Rawani from the Nigerian Stock Exchange, where our studios in downtown Lagos is too. Lukman Otunuga, who is of FXTM. Let's have a bit of a currency conversation. Part of this, good morning, Lukman. And it's good to have elections out of the way, but folks keep asking, where is the exchange rate? Give us this currency conversation. What's your outlook on FX markets post-election?
My outlook on FX markets or the Nigerian economy? We are seeing the Naira.
Yeah, well, we need to move the economy, but again, you need the FX as the engine oil for the economy.
Well, the Naira's outlook will solely depend on how Nigeria's economy performs in 2019. So we know about the story defining Nigeria as an economy that is one that's heavily dependent on oil. But macroeconomic data as of late has actually been a breath of fresh air. For example, if you look at GDP growth in the final quarter of 2018, it was the fastest growth that we've seen since 2015. And this has actually pushed overall growth in 2018 to around 1.93%. With inflation pressures moderating, foreign exchange reserves stabilizing, and the foreign exchange itself looking quite well, the outlook for Nigeria is starting to look encouraging despite how fragile it can be. If we have a situation where the government is able to reinforce its economic growth report plan, if we see further diversification, if we see a greater push for SMEs, this would be positive for the Nigerian economy and ultimately will reflect well in the Naira exchange.
Were you encouraged by the relative stability of the Naira against the dollar during the election campaign and the poll period?
Pardon?
Yeah, the stability of the Naira to the dollar during the elections period.
So yeah, the stability of the Naira that we saw during the election period was a combination of the Central Bank of Nigeria intervening, but there was also a sense of optimism over the outlook for Nigeria post-election, and this is why we saw the Naira trading where it was.
Again, we're moving on towards the second Monetary Policy Committee meeting of the year, 25-26, and the decisions on Tuesday to 26. So what's your outlook on this, and where do you think the FX will go depending on how the MPC members decide?
Well, it's widely known that interest rates in Nigeria have actually been left unchanged since July 2016. So that's almost 2 years, and it makes sense. The conditions almost 2 years ago have changed compared to now. Conditions in Nigeria seem to be improving. We have a situation where I believe the Central Bank of Nigeria could be waiting for inflationary pressures to stabilize further back towards the 6 to 9% band, and further signs of stability in sectors such as manufacturing, services. Once these prerequisites have been achieved, we could actually see a situation where the central bank actually moves forward to cut interest rates in an effort to promote growth.
Do you think we have enough internal risk alleviations, softening as a measure for the MPC to say, look, we need to lower rates? If that is going to happen in 2019, when do you think that will likely happen?
I believe this will probably happen near the end of 2019, once we have more direction to how the elections have possibly, or what impacts it has on Nigeria.
Administration.
How external conditions are also impacting Nigeria. We've got trade developments, we have oil price volatility, we have global growth concerns. So once the Central Bank of Nigeria has more direction on this, we could probably see some direction near the end of 2019.
Look at inflation. Let's throw inflation into the interest rate and exchange rate metrics here. What do you think, what role do you think inflation will play in the next direction, policy decisions of the MPC?
Well, let me tell you a surprise of myself. I felt that the increased government spending will actually result in rising inflationary pressures. But if we look at inflation, the recent inflation data, it actually dipped. So it's a situation where we could have a point where election spending has not resulted in rising inflationary pressures, or this is possibly a lagged effect and we're going to see inflation rise. If inflation does rise, of course, this will negatively impact the Naira exchange, and this could offer a valid opportunity for the Central Bank of Nigeria to stand pat on interest rates.
Do you think we have more of external risk factors here to consider as headwinds for the FX market than internal issues?
I mean, if you look at the global economy right now, the global sentiment is quite fragile. The big elephant in the room is US-China trade developments. If you look at recent reports, there is some optimism over a trade deal being achieved,
Knocked out.
and this is really baked into markets. But how many times have we seen so much optimism only for everything to fall apart at the last minute? So external risks in the form of trade developments, the possibility of global growth decelerating, even China. China is a major trading partner in Nigeria, and when China sneezes, Nigeria will catch a cold. So these are external risks that we need to continue assessing to determine the Naira exchange.
Britain is one of the major trade partners with Nigeria, and of course one of the investment hubs for inflows into our capital importation, whatever it is,
Yes.
whether portfolio or foreign direct investment. So we can rule out Brexit here. Does that give you, is that in your playbox?
Brexit is indeed in my playbox. Coming from the UK myself, it's all about Brexit, Brexit, Brexit. And what I've come to understand is when we're dealing with Brexit, always expect the unexpected. So right now, markets are pricing the possibility of the Brexit being extended beyond March 29th. If this happens, this could be a welcome development for the United Kingdom and should boost the relationship between the UK and Nigeria. However, though, if we do have a hard Brexit situation where the UK crashes out of the EU with no deal in place,
It's really messy out there for
Nigeria
now.
will feel it.
It's still messy out there until March 29. It's going
Yes.
to be like Y2K, the way March 29 is looking like. But look at the oil market quickly, and we'll look at it. Do you think this will also have a major play in terms of what goes into our external reserves, how we're able to beef up our buffers and continue to defend the Naira from the central bank point of view?
I mean, it's widely known that right now, even though we keep saying diversification, oil remains Nigeria's lifeblood. And wherever oil trades, Nigeria will feel it. Right now, oil prices are trading higher, and this is based on optimism over OPEC supply cuts, reducing the supply in the markets. However, how I'm looking at things, it's a rough tug of war here, because while OPEC is cutting supply, USO is increasing production. And this would seriously impact Nigeria, especially when we consider the 2019 budget. You know, if you look back at the budget, I believe Nigeria was projecting 2.3 million barrels at $60. And right now, if you look at, I believe Nigeria pumped around 1.88 million.
Yeah, 1.7, 1.8.
Yeah, so, you know, wherever oil trades...
And before OPEC gives us a phone call and says you guys have to comply.
Yes.
Look, thank you. Let's continue this conversation some other day. Thank you very much.
It's a
nice to have
pleasure.
you around. Lukman Otunuga, research analyst with FXTM Nigeria. Now let's continue this conversation on the other side. It was International Women's Day. That day was big globally and here, but just a little bit trampled over by the elections. So we don't want you to forget the role of women on our business and market streets. That's coming right after the break. This is your Business Morning.